Hey everyone, welcome back to another edition of Market Talks with Dr. Stoxx. This is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, drstoxx.com, your one-stop shop for all things trading. And I'm coming to you today live from the live trading room in Discord. This is a community of some amazing people, just all around good people who support each other throughout the trading day with trading ideas, with items selected from the news feed, with spots of support and resistance going on in the market. And then I throw out the things I'm trading throughout the day. I give you my entry price, my stop, my target, reasons for the trade. And I'm also available to answer any questions and to do some trader training as we're doing right now. And so if you want to join us, go over to drstoxx.com, click on the subscribe menu, go down to the live trading room, and you'll be good to go and joining us. And we got a live options room as well, and you can subscribe to both at a discount. All right, we're going to start with some index charts. This is the chart of the S&P 500. It is the NASDAQ, I'm sorry, it is the micro E-mini futures contract for that. So we do get overnight data here. And you can see several things going on. So the grand pattern and the trend that we have right now, both the pattern and the trend are falling, right? They're moving lower, which of course is what you typically see in a weak market, in a bearish market, in a bear market, or in a market with increasing levels of volatility. We're in all of that except for maybe a bear market. I think we're kind of above bear market levels now. But the fact is we did go down below bear market levels, below 20%, and now we've kind of climbed back up in a relief rally. So the relief rally itself has a bit of a pattern to it, and we can put a trend line under the lows, which would look, oops, I don't want to get rid of that. The trend line under the, oh dear Lord. Okay, let me try this again. Click on that. Okay, so let's put it right about there. Any break of that line to the south is going to trigger a whole lot of selling. But as you can see, we're quite a ways away from that. Now, I was just saying this to the folks in the room. If we go to the NASDAQ, you're going to see something very interesting. 3 big green bars, 1, 2, 3, each of which close the day. Well, we're still open today, this third bar. We don't know where this is going to close. And right now we're about 2.5%. But 3 green bars in a row on the NASDAQ, over 2%. That's a very rare thing. We only saw it once in 1974, way back when, during a really bad market, the Carter years, and 3 times during the dot-com crash, 2000, 2001, 2002. So what does that mean? It means that you never see this kind of thing in a nice, slow, steady, low volatility, uptrending bull market. You only see this in a bear market. So 3 big green sticks in a row, not a great signal if you're wanting this downtrend to come to an end. Now, all of that said, it certainly can come to an end because the market can do whatever the heck it wants to do. And I'm going to show you a potential bear market ending pattern that we are now printing. I don't think we're quite there yet, but we are now printing this on the NASDAQ and the S&P. We're not getting it yet in the small caps. Don't think. We'll take a look, and I don't think we're there yet in the Dow. But really nice, very hopeful sign that the worst of the downtrend is done, that the bottom is in, and yes, we're going to get still a lot more volatility. We're going to get up days and down days. But if we can hold above the most recent pivot low, and especially if we can close above the most recent pivot high, we've got I would say about a 60% chance that the bottom is in and that we're not going to see another major leg down. All right, let me show you that pattern. So here we have, if we go back to, well, this is the all-time high on at least a intraday basis. And if we start there, we can see that we have a sequence, not exactly perfect, but a sequence of lower lows and lower highs. So here's a first low. It's a little lower than, well, I don't know if it's lower than anything else. there's a low. Here's a lower high. Here's a lower low. Lower high. Lower low. And then we get a little bit of optimism. This came in right around the inauguration, late January, when everything was pretty hopeful about Trump not doing much with the tariffs, or anything at all with the tariffs. And so we had a little bit of a higher high, right? A higher low, a higher high, and then tariffs, and tariffs, getting worse and worse and worse and worse, higher and higher and higher. And that triggered all the major selling that we're in now. And it's just lower, low, lower high, right? Lower, low, lower high, lower, low, lower high. Okay, now what happens when we see that pattern come to an end? So let me see if I can draw it out for you here. Where's my drawing tool? There it is. So downtrending market, lower highs, lower lows. And by the way, this is something that I learned when I studied technical analysis way, 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 way back. The downtrend is only formed when you have a sequence of lower highs. Doesn't matter what's going on with the lows. It's a sequence of lower highs. That's a downtrend. And on the uptrend is just the opposite. It's a sequence of higher lows. Doesn't matter what's going on with the highs. It's a sequence of higher lows. All right. We certainly have lower highs since the tariffs started to become a bad thing. Lower lows, lower highs. Now, here's how this will come to an end, right? You've seen this. If you've been with me for a while, you've seen this many times. You get a lower high. All right. Doesn't look good. Market's starting to fall. Doesn't look good. Everybody's starting to plow into lows or going to cash or putting into safe havens, right? Fearing another leg down, fearing another failed rally. Happens all the time in downtrending markets. But here's what just happened a few days ago. We got not a lower low, but a higher low. And that means that we can now draw a resistance line over that most recent pivot high, and that becomes the target. Once we close above that, that's the target for saying, we now have the potential, and it's only potential because the market can do whatever the heck it wants, but it is putting some odds in our favor that the downtrend has come to an end, and we can start now focusing much more. We've been really focused the last couple of weeks on hedging and shorting and inverse ETFs, and we've done fairly well with those. We also had a nice rally in Bitcoin, which gave us a huge win this week. But we don't want to get stuck in a bunch of shorts and that's why we use stops, of course, but we don't want to get stuck in a bunch of shorts if the market is really ready to get back on track to the upside, which is potentially what's happening here. So we need to get a close, right? We need to get a close above that line. Then we need to get a follow through day, and that can happen within 3 days after that close. So it can chop around for a little while. It can maybe even dip a little bit below that line, and we're still on par for a follow through day. But what we need to see is a day that takes out on good volume the high of the breakout day, right? That's a confirmation. That's a follow through day, an FTD. So it has to happen within 3 bars of that breakout day. Otherwise, it's null and void. So here's the thing. Let's get back to the chart. Sorry, let's get rid of all that stuff. So S&P, lower low, lower high, falling megaphone pattern, which is kind of interesting, right? Megaphone means the distance between, you know what, I'm going to get rid of this guy right here for now. Give me a little more space. The distance between I'll put that at the opening price rather than the intraday because that was such a big intraday move. The distance between the supporting trend line and the resistance trend line, the STL, the RTL is getting wider and wider. That's a megaphone pattern. Typically, you see these not falling like this one or rising like they do sometimes, more or less going sideways. So if you drew a midline between the resistance line and the support line, it would be a pretty flat line. That's not what we have here. If we draw a midline in this falling megaphone, it's going to be slanted down. That midline would be right about there. So, what does that mean? Well, it's not a falling wedge. This is a falling megaphone. And you know what? I took a little break during lunch, and I was trying to fish out of my closet the Encyclopedia of Stock Patterns, chart patterns by Bulkowski, who wrote the best book on chart patterns, and really the only book on chart patterns that's worth reading, in my opinion, because I'm sure he has something to say about falling megaphones. Typically, a megaphone at the top of an uptrend can indicate that things are starting to top out because you're starting to get lower lows up there at the top. And megaphone down at the bottom of a downtrend can be a sign of a reversal to the upside because you're getting some higher highs. But here it is. It is at the top of an uptrend, which would suggest that it would morph into something more bearish. But it's a falling megaphone, so I don't really know what to make with that. And I tried to look it up online, didn't get any information. It must be a very rare pattern. Anyway, it is what it is. We're not really worried. I'm not much of a pattern trader anyway, but this is the thing that I'm looking for. I'm looking for, here's our lowest low right here, right? Our lowest low. Here's a higher low. So we got that in place. That was a couple of days ago. Then these three big 2% days right in a row. And here is the pivot high, this guy right here. I'm assuming that's the pivot high we need to take out. Now, I could be wrong. It could be this guy up here, right? In which case, we still have a lot of work to do. And frankly, this market does have a lot of work to do, regardless of which pivot high we're going to get above. But at least on a short-term basis, it would be nice to get above that big green stick, which was the day. What happened on that day? There was it was the day of the 90-day delay in implementing tariffs. Market loved it, absolutely loved it, skyrocketed. One of the biggest days in market history, if not the biggest day. Not real heavy on volume, which is kind of interesting. Not anything historic, but certainly price movement very big. And then it was a sequence of lower coming down, reflecting the realities of our situation, and still so many uncertainties around tariffs. Now, because of a pullback in the level of tariff weight on China, although it's so conflicting, you go online on Twitter and look at some valid news sources, and you're going to see China's not coming to the table. China's not negotiating. China's not coming back on any. They're not upholding their side of the bargain at all. They're still not buying our planes, and they're still not. They're still trying to find other trading partners other than us. And so I don't know. I don't know what's going to happen. None of us know what's going to happen. This could be down 4 or 5% tomorrow by a simple tweet from President Trump saying that, oh, we're putting back 120% on China because they're not doing nothing for us. All right. So I don't like this kind of market where you always are having to keep one eye on the chart and the other eye on the news feed. And we're just absolutely shackled to that news feed for price movement. It's just difficult. But as I said, we've had a really good week and we've been able to put some good money in the bank. Volatility can be very good for trading. You just have to manage your risk. Okay, so that's what we're watching. We're right at that level right now. And the same is true for the S&P. This yellow box right here is quite an important level because it is an SR flip. So it has served as support from above and it has provided resistance from below. And when it breaks, it really breaks, right? Really, really hard. Now, we were up there on the big green stick day and it was all downhill from there. We were up there yesterday and it recoiled sharply to close near the open of the day. And we're right back up again today. Now, the more times you knock on the door, the more likely it is to open. So here we are knocking on that door again. We also have the trend line over the falling or lower highs that if that breaks, if that gives way, now these downward trending or upward trending trend lines are not nearly as not as strong for support and resistance as the horizontal stuff, right? The horizontal stuff gives you an absolute level where prices have either recoiled or bounced. And the falling stuff, the trend lines aren't that, right? There's nothing really magical about the trend line, but it is a way of getting a visual on the momentum of the price. So we're right up against that yellow box. We're also just under the the falling trend line. Now above that we've got the 50. So this is what I kind of think is going to happen. We probably have a couple more days of, and it's not going to be a 2% day tomorrow. Not likely a 2% day on Monday either. It's only happened once in history where we had 4 days in a row. So it would be pretty rare to get a fourth day. But something a little less, 50 basis points, 60 basis points, a couple of days of that. We get up above, we start flirting around with this stuff. We close this little gap. You're going to see this gap on SPY. Since we have the overnight data here, there's not much of a gap there at all, but there is a gap on the ETF, and a lot of stocks have a gap on that day as well, a bearish gap. So probably fill some of that. This would be getting us up to 556.66. That's kind of an ominous number, isn't it? 5666. On I think it was March. Was it March 9th or March 12th? It was March of 2009 when the Great Recession, huge, horrible bear market came on. 50-60% down for most of the indexes, 70-80% down for most of the stock, a lot of key stocks. It was that day, and the S&P on an intraday basis hit 666. I don't know if that has any significance, but it was just eerie. And that was the low. That was the absolute low, and everything was upside from there. Okay, so yeah, we just have to watch these levels. Now, my strategy from here, since we do have probably at least a couple more not so bad days ahead of us where things will at least consolidate and not be too bearish to the downside, market pending the headlines, right? Any negative headline out of Washington, D.C., and down we go. Absolutely down we go. But I think we can start to put on a little bit more long exposure. Now, we've got long exposure in our wealth building portfolio, which is just lovely to have that in the back pocket. These are very high quality stocks that on a day like today, when the market's up 2%, most of these guys are up 3 or 4% or more. So that's always a nice thing to have. We always have that long exposure on days like this when we're trying to swing trade the little moves with inverse funds or shorting a stock or whatever. We can still enjoy upside. We can still enjoy a good green day because of that long-term, long-only portfolio. Okay, so we're going to watch that level. We're going to watch the same level, same thing for the NASDAQ. Let's take a look at the Russell. Okay, so the Russell, it hasn't been at all-time highs for years now. The Russell has not been a good place to find good, healthy, bullish swing trades. And you can see that everything here is downtrending, right? You've got the downtrending linear regression channel. That's a 100-period look back. Every time it gets down into the pink, you tend to get a hold. If it gets up to the blue, you tend to get some softness or rolling over. This is the 2.0 standard deviation, the pink zone and the blue zone. We don't like to buy the pink zone in a downtrending market, but we will short the blue zone, and we will buy a pink zone print on an uptrending LRC, but we don't have that. This is downtrend. The 20 is below the 50. The 200 period moving average is up here somewhere. I don't have it on the chart, but it's a inversely stacked set of MAs, right? The 200 above the 50, the 50 above the 21 EMA. Not a good situation. This also looks rather weak. We do not have 2% days. It's a little bit less than that. And it is very vulnerable here to some downside pressure if that breaks. Now, all that said, we've got a couple of good things going on. After failing yesterday to regain the 21, we are above it today. After failing yesterday of getting through the downtrending line, the RTL, we're back up again at it today. So both of those things are quite good. but yeah, we're still under a lot of resistance, and we're still in a downtrend, and we've got this very unclear macro environment that we're trading against. Now, here's another thing to consider. Let me show you the mags. In fact, let me just do. I'm sorry. Let me do a quick look at gold, which is rallying back up again today after a little 2 day, not really 2 day, 1.5 days of some downside pressure. But gold, I think, is going to be a good place to buy and hold for another 3 months, maybe. I might be wrong about that, but 2 or 3 months. I think that's about the time we'll start to see all of this tariff stuff dissipate. I don't think it's going to be any sooner than that, I'm afraid to say. And in fact, I think May is probably going to be a real reality check for those who are getting very, very bullish about an end coming. Now, I could be totally wrong, and I'm not a politician and I'm not an economist, and I'm just trying to make the most sense of what I'm seeing in both the charts and in the news feed. But I think that we had a little relief. We've had some nice relief, which you always get in both bear markets. Had some nice relief, but unless the tariff situation clears up, so we know exactly what country is paying what, and as long as they keep coming to the negotiating table to talk, I think that's a good development, very good development. And because once they start talking, negotiating, we're going to get some good stuff. They're going to get some good stuff, and everybody can go away happy. But we're not there. We're totally not there. So we just have to be careful. Gold, I think, is going to be a good place to weather through that. Bitcoin is still a bit iffy, and it's had a really nice run. This is the run that got us up to target, and we're out. We're out of Bitcoin right now, and it's flashing a little bit of a reversal bar, and it's still in a downtrend, right? Everything is downtrend, and now we're up above 2.0 standard deviation, and market doesn't like to be outside of 2.0 standard deviation for very long. So we can expect a little pullback in Bitcoin. I want to be a buyer again because I think as long as the dollar is weak, and it has been really weak, which is one of the reasons gold is up, as long as the dollar is weak, I think Bitcoin is a very good place to be. I just don't want to buy it up here. I want to wait until it gets back a little lower. Maybe a dip under 90 would be good. Oil, I think, is about ready to come back in. So it gave us a bearish signal yesterday. We did get short using SCO, and it's just doing a little bit of back and fill today. But I think the next move for oil probably will start tomorrow or Monday, is going to be lower. Oil will trade on recession fear. It's going to trade on production. We had an OPEC announcement which triggered all that selling yesterday, that they're producing more. And of course, once Trump gets refocused on drill, baby, drill, haven't heard anything about that in a long time. Once he gets refocused on that, we're going to see prices come down. And if we do go into recession because of tariffs, oil is going to crack. So I think it's a pretty good, this is a rising wedge. It's a bearish pattern when it breaks to the downside. We had the break to the downside. We just don't have that confirmation yet. Don't have the follow through day yet, but we can do that. We can get one of those within 3 bars. Okay, now let's look at some mags. Let's look at these worst to best. Everything is green today. Cisco, nice green. Oh, look at that. Bullish engulfing candle. Not big volume after a big heavy selling day yesterday, but it is giving us a flag of a potential a bullish reversal down here in the pink zone. And although the LRC is kind of leaning to the right, that is to the downside, it's not much of a lean, and the MAs are very bearish. Volume down here on all the selling pressure is pretty high. So it's not a great looking chart for a lot of reasons, but it's about as good as it gets. Really, it's about as good as it gets in this market. Now, Apple's having kind of a weak day compared to everything else, but it is it's not the worst of the mags. It was for a while. It was not looking very good, and it keeps printing these bear flags that just keep breaking to the downside, and that kind of a pattern, that consistent pattern, doesn't go away overnight. This is a bearish wedge rising, right? When it's not bearish until it breaks to the downside, but the next leg lower in the market, if we don't get some resolution on tariffs, will happen. And here's the thing I wanted to mention. Apple's coming up earnings on May 1st. Facebook is coming up on the 30th of April. Google, I think, is tonight. Yeah, Google is out tonight. Tesla was just out. Not a good report. Amazon is May 1st. Microsoft is May, late April. So we're getting all the big guys reporting their earnings. And what are they going to say about tariffs? Probably going to talk quite a bit about tariffs, about supply chains, about margins getting squeezed. And they're probably going to say something like, we're not able to give a very clear forward guidance look until we know more about tariffs. So that's a problem because the market doesn't like that lack of clarity. But we're not there yet. And today is a great day for Microsoft. Look at this big green stick. Now, it's not a buy right here. You don't buy a big green stick in a downtrend at the top of the LRC in the blue zone, tagging the 50-period moving average. No, 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 no. Not that it can't keep going higher. It probably could for a day or two, but that is got all the makings of something like this, right? A reversal to the downside sharply, and then you're just sunk. So we don't want to do that. NVIDIA's not doing that great. I have to say, it's still very weak. It's a good day today to be in NVIDIA, but it hasn't been lately. We made no, I'm sorry. We took a loss on our NVIDIA short because of that gap up day. We rolled down our stop, or we rolled up our stop because we were in an inverse fund and had some nice profits there. And then we lost it all yesterday on the gap up. Anyway, it is what it is. So Netflix is just, man. So this is about the strongest stock in the whole market right now. It is a leader and it is leading the way. Now, does that mean that the rest of the market is going to be following Netflix? No, not because it's not really in the same space. It's not a semiconductor. It's not a computer maker. It's not it is kind of a cloud play, but not really. It's kind of an AI play, but not really, right? They're not really on the forefront of all the um, tech growth areas. So it's an entertainment, right? It's actually something that does pretty well during recessions. So it could be that Netflix is becoming a very crowded trade because everybody's worried about recession, right? People get laid off and they can't work, and so they scroll through Netflix for hours on end. And maybe that's what's being reflected here. So that would not be good news, but it is good news if you're long Netflix. Qualcomm is having a good day, and it is about to close a gap, which is pretty good, 150. Current price 147. Not really a swing trade there, but it's one to watch. And CRM is up on NOW, and Avgo is another semiconductor. Again, you don't want to buy it up here when it's tagging the 50 like this. In fact, I had a whole trading system that I put into my one of my books. I forget which one. It's called the MA tail tag, or maybe it's in a manual. But the whole system is based on this kind of a trending thing where you go counter trend, you tag the moving average, and then you look at a couple of other things. And if those things are in lining up, it's a short in this case, or it's a long if it's coming down to the moving average from above. So yeah, I wouldn't go long here, Avgo, but it is, again, it's showing the same pattern, right? Higher low, breaking out of the most recent pivot high, if that is indeed the most recent pivot high. I'm not so sure that is, but it could be. And yeah, so things are trying to look up, literally, but the market has a long way to go, a long way to go. And I don't think that I don't think we're done with some scary days of downside selling pressure, which will make you regret all the longs that you bought. I could be totally wrong about that. Trump could come out this evening and say, we made a deal with China, and 20% or 15%, or China's agreed to buy our X, A, B, and C because we're going to, I don't know what. I just don't know what. I don't know how they're going to negotiate, but that could happen. And then we're up 3 or 4% again tomorrow. So we'll see. Okay. Well, that's all I've got for you guys. Oh, I did want to show you a couple of things here. So I don't know what's going on with Tesla. Tesla, in my opinion, had all kinds of good news, right? I know the earnings were horrible. Earnings were bad. One of the worst quarters they've had on a percentage basis since they started. Um, and the market was okay with it. It was like, okay, we knew that already. You didn't give us anything that we didn't already know. It's already priced in. So let's go ahead and rally the stock. So a little bit of follow through today. Today's not too bad. We are regaining the 21, having lost it yesterday, but we're still below the 50, and that's probably going to be about all that Tesla is going to do. And here's the thing that concerns me about Tesla. It's not, and Tesla is not the market, right? It's not one of the big leaders. It is a big mag. It is an important piece of the economy, but it's not a leading stock, right? It's not at the heart of software, and it's not at the heart of cloud, and it's not at the heart of AI. It does a little bit of all of that, but it's really, I call it an energy slash transport slash retail play. Um, and yeah, anyway, enough about that. Let me show you this. I've been keeping track of uh, all the put and call trades made in Tesla just today, over $1 million each. You can see it's just puts all the way down. A couple of calls have recently come in, and then some more puts. Okay, look at this: 15 million on one trade, 27 million with an M, a capital M, on one trade. Now, where is Tesla? What's the spot price here? 257. So these two guys are deep, deep, deep in the money. So clearly they are using the puts as a way of shorting the stock without having to put all the cash outlay and go heavy on margin. But and it's probably the same guy because it's at the same expiration. And they did it at the same time, same spot price. So that's a good $40 million in bearish exposure to Tesla. And if you add up all of this, subtract the calls, there are only 3 calls in there. Add up all of this, right? This is the same guy: 170, 170, 170, all for August. 170, right? It's now at 257. 257, all the way down to 170 by August. Let's take a look at what that looks like on the chart. Where is 170? 170 is down here. When has it been down there lately? Not lately. It was last there in June of last year. So, and it looks like a pretty good area of support down there as well, 170. So it's whoever is buying those. How much is he paying for those? Let me see. He was buying this at $6.50 each, right? $655 each. 5,000, 5,000, 5,000. What does he know that we don't? So here's the thing: Tesla. So they got some political help because Congress just said that they're looking for ways of making robotaxis a little more, less regulation, get them into the market faster. That's very good for Tesla. And Musk is saying, hey, I'm going to stay with Doge just a couple more weeks, and then I'm going to go back to being CEO full time, more or less full time. That's a good thing for Tesla. And the fact that the market didn't just sell off on a really bad earnings announcement also is good. So I don't know who this guy is or what he's thinking or what he's expecting from Tesla, but look, 815, 815. These are all at the same expiration, different strikes, some different sizes. So they may not be the same guy, but somebody knows something about August. And I don't know what it is, but I hesitate. I hesitate to suggest going long Tesla right now, even though the chart is not horrible. Okay, let me just do one quick look at a few greens. Forgot to do this. CPRX is a very well positioned from IBD leaderboard biotech. It's looking pretty good, kind of like CHWY on an inside day bullish bar here. There's Tesla, Amazon. Okta is a cybersecurity play. I'm really looking for LRCs that are uptrending and somewhere above the 200 period moving average, which I don't have on the chart, but all of these qualify for that. Fortinet is your best cybersecurity play, and it's in breakout mode above the 50. Netflix, we saw PANW, same thing. Okla, same thing. Net is slightly uptrending, very good fundamentals, and was seeing heavy call buying yesterday. So yesterday ahead of today's big green stick, somebody knew something, but we'll see where that goes. Zscaler, big green stick today. All these cybersecurity plays are doing really well. Here's about the only China play I can recommend. FUTU, very good fundamentals, uptrending LRC, recaptured the 21 after it looked like it was going to reverse yesterday. Filled the gap too on some early lows, and now back up. Good strong candle right there. Now, I wouldn't think this goes any higher than about 100, but you're at 93, and you can leverage that with some options. We saw AVGO. PLTR. So here's your breakout of a bottoming pattern, inverted head and shoulders. Not a real well-formed one, but I like the fact that the the right shoulder is very tight, small, and it got through quick. Left shoulder is much broader and deeper, and that's what you want to see. And we have the follow-through day instantly, right after that. So it's a little high for me, a little chasey right here, especially if we are morphing soon into some market volatility. But it's one to watch. And if you're already long, I would hold. I would just hold that guy. CLS, I don't know why I have this one because that's a downtrend, and it's got earnings tonight. I'm not interested. Crowd, another cybersecurity. iNode from the leaderboard. GEV is a good play on AI data centers, and it's in breakout mode. Didn't really have that little pattern there was forming, but didn't follow through. But we could call this a double bottom. There's probably some bullish divergence down here as well. And SMCI, I would say this is kind of a lotto play. LRC is slightly uptrending. We're starting to print a higher low. And yeah, it's an exciting stock to trade as well. All right, guys, I'm going to have to let you go. I need to jump over into the other room, the options room, and do some work there as well. So join me there if you're members of both rooms, and we'll continue our discussion. God bless everybody. Have a great rest of the day, and I'll see you soon. Bye for now.